capability at all.
I'll make you a co-host.
Thank you. Because I'm guessing I'm the only one here at the moment.
Okay. Yep. We are live on YouTube right now. You can start.
Okay. Is there anybody else here before you start that, James? Well, everybody, welcome to another week of you. I've just lost it. Welcome to another week of Trader Talk Radio. It's great to have you all here. I am just trying to flick through where I am at the moment. James, can you help me here, please? I've had so many webinars up today, it's not funny. I've just come from a live event for the last 3 days, and we are doing what we can here. So it's been Paul Hutton.
Can I help you, Ainsley?
Yeah, Paul, it's great. I've just come straight from IFP and trying to log on and trying to share. I am struggling a little bit here at the moment.
No worries. No worries.
So I'm not sure what is showing up on a shared screen or what is happening. I'm trying to share a screen.
Okay. I'll share the screen first.
Okay.
And
I'm all over. I'm everywhere.
Right. Okay. Can you see my screen?
Great. Hello. Thank you for that.
It should be a weekly chart for pound US dollar.
And that's what we've got.
Yes. Welcome, everyone. Welcome to the weekly show. Paul Hutton here. We'll be joined by a cast of thousands today, including Ainsley and Julian, and I'm not sure who else, but we're here first. And I want to kick it off with a little bit of analysis of a couple of pairs that I've been watching over the last few weeks and share with you what I think is going to happen over the near future. This is the pound US dollar, which was in the toilet a couple of weeks ago, and it was losing ground to every single currency, and it bounced back with a vengeance. Looking at the weekly chart here, which where price action has really been ring fenced, if you like, by a couple of trend lines. So we're in a big kind of a triangle formation there. And if I go down to the daily chart, here's some key things that I'd like you to notice. So first of all, we came back from around 122.50, and there's actually a horizontal level in there as well, right? So there's the 122.50 horizontal level. Which was our target. If you're the people who join me in the Sunday night show, the weekly market analysis show, we made a lower low. We were trading it here, and we got down to 122.50, and that's where we stopped. And we came back here and through 125, through 126, and now we're sitting just under a really important trend line here at about 126. The trend line's about 126, 60, 70. But the thing about trend lines is if you move them around a bit, right, you can move it up a bit higher and say, oh, look, there's a bigger target, or I can move it down a bit lower and put it on the most recent swing high there. It looks like we don't have far to go. And then sometimes we just don't get actual touches on these trend lines. So we could actually put it here and say, well, you know, we've made a near-term top in the pound US dollar. That's not what I'm saying here. I'm just saying you have to give a little bit of license to these trend lines if you're going to plot them on your chart. Now, I think if we actually go back here to the weekly chart, there's a much longer-term trend line that runs through here, which intersects with the 130 level. So I think medium term, before you just put that on the weekly and the daily. I think in the medium term, pound could actually stretch all the way up to 130. But in the short term, and go back to the daily chart, in the short term, I think we're going to top out here. The 200-day moving average is something that could potentially keep the pound buoyant at this level. Yeah. But if you believe in the trend lines here, then we could come all the way back down to around about maybe around 120, 124. Yeah, back down to here again. Now, whenever I look at the pound US dollar, I always look at another pair, which is the euro pound, and this has turned into one of my favorite kind of currency pairs to analyze as a cross, because it really is it's really a benchmark of what's going on in the European region, right? You know, the relative strength of the euro versus the pound, and we were trading in boxes, and then we broke out and we were in other boxes, and using the daily Waverider strategy and the 4-hour Waverider strategy, we actually were able to trade some of these as trends. And then we went up all the way to about 91.80 or 91.75, and we came crashing back down through the 90 level. At the moment, I reckon that the euro pound is one of the reasons why the pound is experiencing or enjoying some relative strength here. The euro pound, when it's rallying, oftentimes you see the pound struggling or suffering, and when the euro pound is retracing and coming back, oftentimes you see the pound moving in a negative correlation to the euro. Now, what is not shown on this chart is the 50-day moving average, and we're actually sitting right at the 50-day moving average at the moment. So, you know, income creator traders, you'll be looking for entries soon. There's no entry here yet, because even if we go down to the 4-hour time frame, we just don't have bullish price action. But I think the euro pound will hold the key to the pound's next direction, whether it breaks through, whether the pound breaks through this trend line here and then heads up to about 127.60 and then beyond that to 130, or whether the pound stops here and comes back down, interacts with the 200-day moving average, and then potentially heads lower back down to 125 and 124. And so what I'm looking for here on the euro pound is some bullish price action. I'm not super bullish on this currency pair until we get above the 90 level. 90 is a really, really important psychological level on the euro pound. So we could dip up to here, and then we could come back down. And again, euro pound bearish for me equals pound bullish. Now, I'm gonna open up the euro chart, the euro US dollar chart here for you.
No, stay there.
No? Okay. All right. I shan't go any further. Julian?
Go back.
No, Julian, welcome on board.
I'm glad you stopped me, because I actually don't really want to analyze the euro US dollar, because I think the chart is really boring at the moment, but I see some potential.
No, we got something in everything. Right, okay, could you see the monthly chart up of the cable, please?
A monthly cable chart, just a second here. Okay, there's a monthly chart of cable.
Right, now, if you can blow up, thank you. Right, now, you see why 128.50 is so important. That shooting star, thank you, there.
Mm-hmm.
We break that, right? We break that. We've broken the monthly chart, right? We're also confirming the ring low on the monthlies. You have to ignore the March price action because it was sort of bollocks anyway.
Yeah.
And you're now confirming a higher low on the price action above 128. This thing's taking off. What's the high we put in place back in 2017?
2017.
Keep going there.
This one.
Yep.
Yep. It was in January 2018.
Where's that? That's where cable's going to 145, and we'll go there quickly.
Okay. Well, that'll shoot past my 130 target then. Nice.
So that's in the face of Brexit, no deal. They're pulled out of all the trade agreements. They haven't got anywhere near as many trade agreements as they had previously when they're in the EU. Why would it go there?
Hey, Ainsley, how are you?
I'm well. Just a quick question.
It's in the market, isn't it? Is there anything we don't know about Brexit apart from the fact it's obviously a complete failure, apparently?
Apparently, apart from that, but why would that push a currency higher?
Because everybody knows it already, right? That's
Okay,
why
so it's factored in.
That's why we're trading at 125 right now, because it's in the market. Will also be the UK. I don't know why I'm saying we. I live in New Zealand now. We will
Spread your bets.
Yeah. Still got too much money left there. The UK will be the fastest growing European economy over the course of the next 3 years, because they preempted the COVID spend, because they were spending money already on infrastructure and just about anything that moved. So they had an expansionary fiscal policy before it became a popular thing, and has been spread around like confetti. They were already doing it. So I am very confident that the UK will have the fastest, if you like, takeoff of any of the European economies. So
What kind of infrastructure?
If that's the case, and there's going to be relative outperformance of the UK, there's almost no chance they're going to raise interest rates. So I think that you've got all the ingredients for UK economic outperformance. I wouldn't be surprised to see 4 or 5% growth. If COVID wasn't around, I'd be expecting underlying growth to be the best in Europe. And there's no way the currency can stay down on that basis. It just fundamentally can't, right? So I'm super bearish euro sterling. We're heading back to the 60s, and I'm also bullish on cable. We're heading back to the 160s. But that's a monthly chart I showed you guys. You can't trade that tomorrow.
Yeah.
Yeah. All right. So just a quick question. What kind of infrastructure, Julian, were they discussing?
I don't know if you've been to London. It's been a number of years since I was there. Yes, it's been a number of years since I was there, and I don't think anything has materially changed, which sort of answers the question, really.
Yeah.
Just about anything. They need. I think they need to replace
London Bridge.
They need to replace absolutely everything in the UK.
Well, Buck Palace is falling down a bit, isn't it? That needs a bit of an upgrade, electrical upgrade. Oh, the Queen's done that already.
I love getting dragged into the detail.
What else would you like to talk about today, Julian?
That was an off-the-cuff one. I was sorry. I just had to intervene because you just glossed over the big thing that was going on in sterling in my head. This is in my head, right?
Kaboom.
Yes.
So just yeah, a lot of 5G upgrades.
That's funny.
Possibly not with Huawei. So
They've been banned.
So the key thing for me is that 128, right? 128.50 level is really critical on the monthlies. And I get that until that happens, not a great deal is going to happen. But equally so, the longer we spend here going nowhere, the more chance we got, I think, of going up. But anyway, so that's my thought bubble. And if you look at cable in the sentiment cycle, it's behaving the exact same way that you would do if you were in the discouragement and wall of worry phase. In fact, I'm not even sure that we're not even further along, and this is the aversion point. So just bear that in mind. But that's
you like the aversion point.
Yeah, I do, and I've been trading the pound long actually for the last couple of 100 pips.
Well done.
Thanks for that. Against a couple of crosses, pound CAD's been the outperformer actually.
Well, that
I was going to say pound Aussie. Jules, do you want to go on to touch on pound Aussie? Yeah, I know you've been in the pound Aussie.
Like, I'm happy to play the straight man here. This is awesome. Yes. I'm very
looking like a guru.
Very happy to talk about pound Aussie and what I've been seeing. So as you will see from the chart, and I can see the chart in my mind, from about 205 down to 180, 180 something, 179 something, the trend has been down. However, I don't know if you're able to put it here, Paul, but is there any way you could have momentum on this? 28 period momentum?
Yeah, we can do that, of course.
That chart just looks like a slinky down a staircase, doesn't it? Ka-chunk,
How
ka-chunk,
many
ka-chunk,
periods,
ka-chunk.
Julian?
28.
28. All right, there you go.
So that's my vague measure. Now, if you could just squeeze it up a little bit, because that's a fraction too much data there.
You mean you want this?
Keep going.
Daily or weekly?
No, stay with where we are. Data's good,
Okay.
but just go a little bit. Can we go a little bit wider if possible? So there's
Well,
less days.
Less
Less
symptom.
days. Oh yeah, sure.
Open up.
Okay, and I'll just make this a bit.
Yeah.
Right.
Okay, so the important thing about momentum divergence is that momentum divergence occurs when you have a new low in prices not followed by a new low in momentum. And as you can see, there's been two or three instances recently. Thank you, Paul. You're already one jump ahead of me. So to everybody out there, and by the way, I forgot to say to everybody, hello, everybody, and good evening from New Zealand, and welcome wherever you are in the world. I'll do the slightly more polite bit now, rather than just intervening in the middle of a conversation. As you can see, we've got prices continuing to fall, but momentum is turning around and turned around quite aggressively. That sets up a bullish momentum divergence trade, right? So what does that mean? It means that the trend is coming to an end. The market's oversold. It's been going down for a very long time. It's ripe for a reversal. When those reversals happen, they can be very, very sharp. So 5, 6, 7, 8, 9, something like that, probably 9 bars, depending on the time frame and everything else. This one happens to be a daily chart. We could easily see this market sharply higher to 184 now on this short-term reversal. You know, above 182-ish, 182 and a half, all bets are off, and I think you're just trading it on a short-term signals that you've got running. We may get up to those previous highs, but don't bet on it. And that isn't the point anyway. What we're trying to do here is we had a relatively tight stop, I think, of about 75 pips, possibly a little bit wider than that. That trade's already up 1.5 points now, I think, or 1.25 points, something like that. So for 75, we're already at 2-to-1 on that reversal trade. The reason why I quite like these ones is because it's sort of like where everybody's wrong trade. And when you look at these types of trades, you say, okay, well, where is everybody wrong here? Well, they're all wrong when we start to get above weekly highs and recent weekly highs or ringed low formations on the weekly charts. And we start to get into the place where you say, actually, the market's got this wrong and is positioned poorly and will then have to cover their short positions. So again, as you see going back, this trend has been in place since March of this year on the dailies, and it, I believe, was ripe for reversal. And I've been talking about this now for about 2 weeks, and it finally kicked off this week and became quite exciting quite quickly. So we'll see what happens next, because we never know, because we can't predict anything. We're just trying to make the best guess at it. And right now, I think the best guess is that this retracement is in full swing and is going to go a little stronger. And again, that's supported by stronger cables, supported by the troubles that Australia is having possibly on the economic front because of the possibility of a second wave hitting Australia, certainly hitting Melbourne.
Yes.
They're particularly happy right now.
Do you mind
So
if
you
I
can
bring up the Aussie dollar chart?
Just before you go there, I mean, one of the other things on a technical basis there is that we had a solid double bottom there before, and then a huge bullish engulfing candle that absolutely took everything out, and off it went. Plus the momentum, plus everything else that Julian has just listed. So apart from the fundamentals, you've got the technicals there that have just absolutely supported a return, a reversal of the pound Aussie long.
Yeah, and look, it's a very similar sort of pattern to what happened in Euro Swiss actually about a month ago.
Yeah, yeah.
Euro Swiss was heavily oversold and then had a reversal that was spectacular.
Yeah, Helen, just watch where you are at that one. Helen's just asked us whether this is a possible trade tomorrow. This is a daily chart, and you've had a good strong, last week we had a good strong move up. We've got 4 bars there that it's hit a level of resistance, come back down and close. But what we're going to look for is more movement to the upside, but be careful where you go in.
Yeah,
is all I'm saying, is wait for a retracement and then go in. And you might have to drill down to a 4-hourly chart before you assess whether that's a good option. But as Paul's just drawing that line, there's a really good solid level of resistance and support that has been broken now by the upward movement. Whether it comes back and hits that first and then takes off up to the level that Julian's pointed out at 182. Yeah. But this is what you've got to be across the charts. You've got to be across either, if you're trading daily, then keep an eye on the daily chart. If you're looking at 4-hourly, keep across those 4-hourly bars. Okay.
So I get that people are keen to trade this, and sometimes you get into this, me too, because the other people are in those trades. I think what's really important here, Helen, is that you needed to be in a little bit earlier on this to give you the right risk reward. At the moment, if you're trying to look at a daily chart and trade it off a daily, your risk is about 2 big figures. Well, you're not really going to make much more than that. So it's sort of like less than a 1-to-1. So I wouldn't be looking to take that type of trade. We can do way better than that on these reversal trades. So I would be searching for the next one and just see how this one plays out. There may be a higher low at some point that we can take advantage on, which is a sign that not only is the short-term trend reversed, but the major trend is reversed as well too. And again, that'll come on the back of most likely sterling strength rather than necessarily, unless there's something weird happens in Australia, significant Aussie weakness. So I think it'll be outperformance of sterling, and there may be better places to put the money. There may be better places to put it, such as euro sterling, or in or trading pound US dollar, so trading cable. So just bear that in mind. This is a trade for a few days from my perspective.
Yeah, I think for me, I'd be waiting for a return down to the about 180.50 level, and then looking for some bullish confirmation that we're going to bounce off that level as a retest, and then that's where the smart money is going to potentially jump back into this trade.
Yeah, that could take a few days, right? So to answer Helen's question, so cable, there are lots of nicknames in the foreign exchange market. Traders are terrible people. They tend to use abbreviations and nicknames for everything because it just makes things a little bit more confusing for everybody else. So when we say something like Kiwi yen, you sort of get that, right? When we say cable, it means the sterling US dollar rate. And the reason why it's called cable was because in the 1970s and early 1980s, when the two centers of New York and London were communicating, there was only one telegraph cable that they were using for the telex machines, and that was a transatlantic cable. The financial institutions were the first ones to put those in place. I think it might have been way before the 70s, but anyway, way before I was even conscious. So the rationale behind that was that it was just how the telex machines worked, and as a result of that, it was called cable because there was only one foreign exchange trading currency pair. It was just that sterling US dollar was the one pair, right? It goes to the fact that sterling used to be the old reserve currency, and now the US dollar is. There were no such thing as a euro in those days, and goodness me, we wouldn't be trading something in Asia. So it was just the sterling and the dollar that was traded.
Yep, that's right.
Okay, so you got pound sterling, you got cable. We know, and they're all interchangeable.
We were talking about the Aussie dollar just now, which is sometimes referred to as the Pacific peso, especially when it's weak. It hasn't been weak lately. I actually just wanted to, if you give me a moment here, I'll just pull up my.
I will, Paul, because I was just while you pull that up, Ainsley and I can just talk about the many reasons why people have strange names for the Australian dollar, mostly connected to the people that live there.
Don't even start. Yeah, thank you. And he had to go there. Of course he had to go there.
Because coming from New Zealand, of course I have to go there.
So, you got the Kiwi, you've got the New Zealand dollar, you've got the outlying suburb of Sydney, also known as New Zealand. You've got, for the Aussie,
It's not this one I want, is it?
AUD. There's not too many. You can't really flex too much on the Aussie, can you?
Nah,
It's the
lovely.
Aussie. Okay, there we go.
Right.
Paul,
So
blimey, Bill, that was a debacle.
this is the Aussie Kiwi. And
Aussie Kiwi. Yes, you were talking about this last week, weren't you, Paul? You were saying this is going to go short.
well, yeah. In fact, look, Trader Joe's put out a call to buy this. And as a fundamentalist,
Talking last week.
I can't dispute his logic. But as a technician, it just wasn't the right time to buy it just yet.
No.
I had called a target of about where it is now, an initial target, and we actually traded this on the daily wave rider. We just got to our take profit level on Friday night late, but it could potentially fall all the way down to 105 before the Aussie, has a chance to potentially bounce back up here. There's some really good horizontal support at 105 even, which is about 60 pips below where it is now, if it manages to get through the 200-day moving average, which, as you can see, has been a fairly interesting point of inflection for the Aussie Kiwi. It was resistance here, it was broken through, and then it was support over here. So, it would be within its character to have a potential bounce from here. But the Aussie against the US dollar is starting to potentially retrace after many days of after many days of bullishness. Now, not being particularly a fan of fundamentals, I don't. We can put it down to the COVID situation, or you can put it down to the dovishness of the RBA about future prospects for the economy. I think the economy of every country in the world is going to suffer over the next 12 months or more. But the Aussie has just been starting to experience a little bit of distribution here. By distribution, I mean selling / profit taking, and it's just kind of broken a key. It's a key trend line that was running through here. That was running along. Put in a little bit of bearish price action there. Did test the 70 level once again, which is key resistance. So I'm thinking the Aussie might still suffer a little bit of softness or weakness, but it just doesn't seem to be going anywhere fast.
It's not. I agree with you, Paul. And I've got to say, I've been watching this really closely because I was watching also the Aussie Kiwi, but it's just not dropping as much as I thought it might, given everything that's going on. It's just bouncing around there between those two little levels. Those bars aren't big, and it's not. There's just nothing.
Yeah, and I mean, our observations on the pound Aussie indicating that look, the Aussie's not really. It's indecisive right now. I mean, look, next week we could see this come down 100 or 150 pips, but for the moment, its character is that it's just going from one place to another place. It's going back. It's just like it's on a string at the moment. So trading currencies like the pound is much more exciting right now than trading the Aussie.
Agree,
Yeah.
because the pound is going, and if it does take off and it takes off, and the Aussie is going sideways, then obviously pound Aussie is like pound Kiwi is going to just be a fabulous opportunity. But and there, something that you touched on just previously was, yes, we are standing on the brink of a potential second wave. We've closed down the state of Victoria. The border between Victoria and the rest of the country has just been slapped down. Nobody wants to know anybody from Melbourne. Everybody's absolutely disgusted and appalled with their behaviour. And there is a potential that the economy is sitting on the brink of a second wave if it does spread. And that is a real concern, because even though that's what we're looking at, we're potentially the first of other economies that may go down that track as well.
Yeah.
You know, so whilst it's not looking really crash hot for us at the moment, we're not as bad as a lot of other countries out there. So there is that, okay, well, it's not great, we could come down a bit, but hey, we're nowhere near as bad as some of the others.
US comes to mind.
I
Sorry, I
look,
shouldn't be laughing.
and you know, it does jump to mind, and the fact that Trump was seen for the first time today with a mask on has nothing to do with it. But yeah, I think you go back to March and you start looking again at how much slower a lot of the other economies were to pick up on the coronavirus and its overall impact on everything. So whilst we're having a few hiccups here in Australia, have a look at that chart. That chart is saying, okay, yeah, we're not advancing, but we're also not, we haven't turned around and hit the skids yet.
Yeah, it just, you know, people are just buying the dips for now.
Yeah.
For now.
Oh, talk to me about oil on that one. Ugh.
I saw oil's price action a couple of days ago. Do you want to Julian? Are you ready to talk about the next thing for you?
Oh, can we talk about gold? Can I get it over and done with? Because I'm just busting. Can we please?
Okay. Well, do you want to take over the screen?
No, I can't, because it's raining here in Sydney, and if I take over the screen, I'll blow up everything.
Well, all right.
So SAU.
I'll bring you up my gold chart, and if you see if you like the
Just a basic template, hun. That would be really good.
Well,
not that one.
I can do better than that. Hang on a sec. There it is. Okay, daily, weekly.
Daily.
No, this is not. Wow, this is XAU USD. Silly me. XAU AUD. Here we go. Okay, so this is the weekly chart for gold. I can
Go
pull
back
up
to
daily chart
daily.
if you want.
That looks much better than.
I'll just delete this comment because it's no longer relevant.
Yeah, let's go back to daily.
Okay, there's a daily chart.
Oh, hello, gold. Hello. To quote unquote, and I'm going to be obnoxious here, I said gold's going to 1800.
And it did.
Ta-da!
I'll move this up to 1800 just to show that. There we go. There's the level.
It did. And we all knew it was going to be a really volatile time. And if you drop down to a 4-hourly chart, it's been a whale of a ride. Back up and down, violent retracements. Up it flew, then it came back flying down again, and then it went up and then it came down again on Friday. And looky here. So all in all, we knew it was going to go to 1800. And it went, and this is very typical of your typical of that behavior around an 1800 level, a big round level, a very anticipated level, and quite a lot of volatility. And we expected it. And I hope people, if they went in, had nice wide stops. I think I really ran that point home last week about wide stops on gold. You cannot trade this like a currency. Gold needs wide stops, she says, after cutting herself so many times on gold and going back to Julian and crying, saying, I can't trade this. Yeah, what gold needs wide stops. It will jump around all over the place, but God love it, we got it to 1800. And I know I've sounded like a broken down record, but all my technicals pointed to gold going to 1800. My next stop is 1826, 1850, 2000, and after 2000, I'll come back to you guys. But obviously, you can't keep going up straight up like it does. Although,
There's the
you know,
monthly.
there's the monthly. Look at it.
1800 was
Look at the left-hand side of the screen. Oh my God, it is going straight up.
was a pretty horizontal
After I
level.
bank, you bet I bank the money. Don't you worry. I'm not giving it back to the market.
Are we going to
So yeah,
Are we going to
we're right at that level. So we expected a lot of volatility around it. We got it. Okay. So whether we're going to get a nice, huge crashing retracement, don't know. Don't know. With gold, with a lot of unknowns in this market, as far as are all the major economies on the brink of a second wave, or with the US that is just going out of control? I read an article, I don't know if you saw it, PH, about, they said America's too broken to be fixed with COVID-19. It was just, they're just like, how do you fix that? That's just diabolical. So when the state of Florida, and it was somebody I saw on Instagram that I follow, was saying 35% of the population of Florida alone is infected with coronavirus.
That's amazing.
They're frightening stats. I didn't look up the other 51 states, but that in itself is frightening, because that is a retirement state. That is, you know, obviously the demographics are that there are a lot of retirees in that area. That's a scary thing for them. I believe Texas has got an issue. Arizona's got an issue. I'm not even going to start. Let's just broadly sweep that with the US has an issue. I don't know about the rest of Europe these days. It's hard to keep track of. All we know is that Australia is really, really dirty with anybody from Victoria at the moment. So
yes,
everybody else in every other state can be really, really smug, but at the moment, that's our view. Gold, whether it still remains that safe haven that's shiny and can be sold and can be used and all the rest of it, let's see if it can hold it. But at the moment, I'm staying with gold. I'm still bullish. I've worn, I've been in and I've been holding this from a long time.
Let me just talk a bit about the history of this of this particular commodity. It got briefly above 1800, but all the way back in 2011. It got to 2000. Got to
1900. It didn't quite meet. It didn't quite get to 2000.
But apart from that one big spike, it has never managed to close above the 1800 level ever.
That's right.
So you'd think, as a technician, well,
you're looking for
4 months of bullish price action here, and you can see the candles even, what was that?
Diminishing.
That was April. April is huge, right? April is like, from open to close, it's about more than $100. For May, it was about $45. For June, it was about $41, and then for July so far, obviously it stopped at 1800 right now. And isn't it amazing how markets almost always close at these really important levels at the end of the week? It's like, okay, we've
it's like they knew.
Yeah, and it's going to leave you all, in suspense about what's going to happen next. But gosh, a little retracement here back down to 1750 would be fairly healthy for the yellow metal.
Before it moved on. And that's what I'm saying. You look at that you look at it, we expect the volatility, we expect a pullback. You can't expect it to keep going straight up in a line. You just can't. Hence the comment, and I can't stress more firmly wide stops with gold, but it's normal technical behavior. As you said, it was what happened with gold ramping up and ramping down. A lot of that back in 2011 Actually, I don't know. George Soros, I know, sold out at 1910. If you're looking at your monthly chart, he
Yeah.
dumped gold stocks. His gold stocks, his gold. He just dumped it on the market. You saw what he did to the Bank of England as
Yeah.
well.
Yeah.
But that
He
was
can move markets, right?
he can move markets. That guy, he's got the deep pockets. I can't. My job is to follow the big boys and just see what I can scrape off pick up the crumbs basically, or a crumb. But that's what we expected and that's what we saw, and we'll just keep seeing it. And as you go from one basket case of an economy to the next basket case of an economy, gold looks solid. So whilst we look at retracements and we'll see things move back, and we, as Paul, you and I are technicians, and we'll see it come back to certain levels, and gold loves levels, just loves levels. You'll see that, you'll expect it, and then it will probably advance again. Now, there were another 3 major analysts reporting that gold would go to 2,000 and 3,000 by the 3,000 by the end of the year, 2,000 in the short term. When you have that kind of sentiment in the market, it feeds into it as a lot to the overall direction as well. It's not necessarily going to happen, but it will affect people's opinion. That's all.
Yeah, no, definitely. When Goldman Sachs or JP Morgan puts out a call on a commodity like gold, that the people listen and people act on it.
Yeah, for sure.
Yeah.
When you got Citi, Goldman Sachs, ABN AMRO, JP Morgan, all those big analysts, and you can bet your bottom dollar that
well, they're going to be long when they make the call, aren't they? They're already going to be.
They're already in it.
Yeah,
I was going to say, I'm sure their trading room were not the last to hear about it across the news wires.
Right.
You can bet that their traders were already positioned before that has hit the market, possibly done to bounce current positions along.
Yes.
If you want to take a really cynical view, but either way, you've really got to be watching the market and see what's happening on the moves before those. The best thing, and I've done it only twice, is I've been in the market because I could see the market being bought and it's moving, and then had those reports come across Reuters or Bloomberg or whatever, and I've just gone, phew.
That's a good feeling. Yeah.
Phew, I'm on the right side of this.
In front of the news reports.
Yeah.
So we've had a bit of a look here at the gold chart. We've made some predictions about the future. And what else are we going to look for today? What else are we going to look at today?
Let's chuck up an oil. Chuck up an oil chart. XTI. Go down 2 below. That's it. That's the one I like to see.
All right.
Now,
I don't have.
I'm just hating oil at the moment. Sorry, I just because look at that.
Yeah.
Sideways, just absolutely sideways. I'm looking at fundamentals. It's just gone down. It's just COVID scares, and then it fixes up, and then they're over the COVID scare, and then it goes back up again. And Saudi Arabia actually had the cheek of putting up their price per dollar, $1 per barrel on their sale to China. Obviously, that I don't know how they got around that. Didn't look at it, but you can see it's just going nowhere at the moment. It's going sideways. It's filled that gap. There was that huge gap back in it at the end of February, beginning in March, and it gapped down and went down. We've traded back up, and now it just won't go any higher. Now, all the futures contracts that I've read going forward, August, September, October, are all stepping down back down to around that $33 level. So that was at the bottom of that last. Yeah, just last sideways movement, if you were going to put a big consolidation box around that movement from where the lower white line is, sort of a little bit further south of that, you can just see it going in there, and it's just not going any further north at the moment. It's really, really, yeah, look at that. It's bouncing around in there. The guys were, and it happens next week on the 15th of this month. They're going back to end their 2-month restriction. So it happened on the 15th of May. They had to cut restrictions for OPEC plus countries. I'm talking about the guys like I know them because they live down the street. The OPEC countries were all signed that agreement, including Mexico, at a different rate, where they were going to cut and restrict output for 2 months only. And then they were going to ease back into production until the end of the year and review it at the end of the year. Now, most of us would know, and common sense would seem to think that, what are you doing? But we'll see what that happens come the 15th of July. So that's when the restrictions, the quota cuts are lifted and they go back. And Russia's made it quite clear they're going back because they don't see why they should keep restricting themselves when countries like Canada and the US are not included in OPEC quotas and restrictions.
Right.
Yeah, they missed that whole let's just not flood the market kind of thing. Missed that memo. But that's what they're going to do.
Well, they don't exactly care about the rest of the world, do they?
Unfortunately, when it comes to oil, they should.
Oh, absolutely. Yeah. It's a global market, and you know, it's OPEC is a you know, a global group of oil producers, and they really should be taking care of each other and looking out for each other. But
absolutely, and we just don't have that at the moment, and unfortunately, that's the case. But you know, people say to me, "Well, where do you think oil's going to go?" And it's just like, I don't know. I got nothing. It went up there and it kissed the 200 moving average, and then it came straight back down again. And then it's just bumped backwards and forwards, and it's the smallest information that is moving. If you go down to a 4-hourly chart, Paul, it's the smallest information that, and that looks like big wild moves, but yeah, it's the smallest information that's really moving those markets, and that is crude oil inventories, or the potential of a second wave, and certain economies saying they may have to shut down, and you'll see and that's it.
Well, Friday it went up about $2.50, and I think that was on the back of
COVID fears were over.
500. Sorry.
COVID fears were over with the other one, let alone the S&P.
Yeah, but I mean the S&P bounced back on Friday, and this normally correlates with S&P. So that was how I'd analysed it. It was just moving in tandem, but it pretty much went back to where it had started on Thursday.
Yeah, exactly. Hasn't really gone over that 41.50 mark very much at all. But yeah, it's just, as you said, it's gone all the way. It's done a circle and gone back. And anybody who's holding it is just like, well, you go back to the last swing low, you go back to the last 2 swing lows on a 4-hourly chart, and you're still in a mess.
Yeah.
You would have been taken out, chewed up, spat out, and it's gone back the other way. So yeah, it is really, you look at that 4-hourly chart and you look at it and you think, you can't trade that in a pig fit.
No. Well, there's better things to trade right now anyway.
It's a mess. So gold, I'm still bullish. I'm holding it for a longer term. Oil, and you know I love oil, but gee, it's just not giving me anything at the moment.
Yeah.
Aussie dollar, we said, was going sideways. Pound is looking strong. Pound Aussie is looking strong. With that, you would look at maybe the pound Kiwi as well, because Aussie and the Kiwi are highly correlated.
I'm actually long. I missed the pound Aussie, but I got the pound Kiwi long. So that's That's what I'm kind of
Yeah,
seeing.
that moved, and so did CAD actually. Pound CAD had a good move.
Oh yeah, well yeah, that was my best trade. I just sold out a pound CAD on Friday.
Okay.
It was approaching my take all profit target, and I thought, it's
Time to
Friday.
go.
I want to sit on this over the weekend. I've made about 250 pips on it already, so
Excellent.
yeah, time to get out. So this is the New Zealand. This is pound New Zealand, which has got very similar behaviour to pound Aussie. We see the bullish engulfing bar, and then we see a few days of cautious buying here. Nothing too decisive, but like we saw before, the New Zealand dollar has really been outperforming the Aussie dollar. Pound has been doing great, but with continued pound strength, I think this will just keep going higher. And if the Aussie Kiwi starts to reverse, then you'll see this one also follow suit as well. So gosh, we've covered a lot of different markets this afternoon. Julian, are you still with us?
If he's still with us, I'd love to hear his take on dollar yen.
Hey guys, how are we all doing?
Paul.
Hey, Paul.
Hey.
Hey, how are we all going, guys?
Great.
We're in one piece, just. You must be too.
It's been a pretty full-on day, pretty full-on few days, hasn't it, Ainsley? Pretty busy.
Sure has.
Hey, Helen. Seems like you guys are well in control here. Is Julian still with us?
I didn't hear him.
I'm still here. I'm still here, guys.
Okay.
Just waiting.
PH, can we have a dollar yen chart and
You can.
please, because this has fascinated me. I've been watching it and watching it and watching it, and it's driving me nuts. Look at that. Look at that. Oh, dear Lord. What can I say? When's it going to move?
What do you have to say, Julian?
When's it going to move? It
looks
better on.
It started to, at the end, it started to strengthen here.
Then it changed its mind.
It's not breaking.
Then it went back. Then it changed its mind. It went down again. Changed its mind.
I've been watching the weekly chart on this, and really, for me, the previous 2 weeks, which had bounced off a horizontal level and put in some bullish price action, were really the price areas to be broken. You can't really be super bearish about this until it gets under 106.
Yep.
So between 106 and about 108, 200 pips. It's just been stuck there in a holding pattern.
Dollar yen, I like to trade it, but geez, I tell you what, it's something that's given me. You keep looking at it, and it's just like, you've got to be joking. The other day, I watched it for close on 2 days, and it went from, what was it, 107.43 to 107.51. I was just like, I thought I was losing my mind. I thought, if I look at this chart once more, I'm going to absolutely lose the plot. But it was that kind of thing. It just wasn't going. Please make up its mind and just go somewhere. Yeah. But it's really hard. I like the spikes, Helen. Yeah, I do. But let me tell you, there was nothing spiking about it. It was just going sideways and doing my head in. The one of the reasons I do look at dollar yen often is because it's high. It used to be very highly correlated with. Anybody guessing?
Yes.
Any guesses out there? It was gold. It's gold. It used to be highly correlated with gold, which is one of the reasons I used to keep a really good eye on it. But look at it. Dead as a dodo.
Yeah.
I would say the correlation has broken down. So people, I know we used to say dollar yen and gold highly correlated. It is not the case at the moment. So I would step away from that kind of opportunity. Not too sure about that, actually, Helen. I could probably give you a better correlation on CAD and oil and yen and oil and things like that, but dollar yen and gold, it just has always been. So it's like, you know, the Comdols and gold and S&P are affected by those
And it's an inverse
those
correlation.
movements.
Guys, what have I missed? We've heard some stuff from PH. Have you heard from Julian much?
Yeah, we've heard from Jules. He's I think he's rolled on.
Julian, he's still in the room.
Yep, still here, Paul.
Oh, he
Got it,
is there. We sung out before.
I'd like to hear a bit more from Julian.
I'd like to hear something. Julian, you've got something more to add?
I've got a
Explain
few
this.
I've got a few things. Let's deal with dollar yen because it's the currency du jour at the moment.
Look, I would
So
love some more, Julian. I wouldn't mind. You know the chat we were having the other day in the car? I've got some stuff on that to share later on as well. It's been fascinating. I've had a great bit of fun having a look at that. This is you on dollar yen, Julian. This is your chart here.
it's not.
I'm the chart master today, Paul.
Okay, there's Paul Hunt's chart on dollar yen.
Okay, so the as far as I can see, dollar yen, to everybody's point, is stuck in a bit of a trading range. However, this is about to end. It will end in the third week in July, which is another week to go. At that point, we have the seasonal strength and the yen kicks in. It's a very strong, best seasonal strength in the entire year. I expect there to be a move. And I would imagine the move would be to the downside. So the Japanese yen is way too cheap, and it will most likely strengthen against the dollar, which means I suspect dollar yen's going to go down. That's my vague call. If it doesn't, then that means the seasonals aren't working this year, which I'd be surprised about, given they've been relatively consistent in the yen most of the year.
Yeah, they have, haven't they? And sorry, Julian, this next week or the week after for the move down for you?
Week 3 of July, Paul.
Gosh, I'm trying to work out. It's the 12th. We've had 2 weeks, sort of. You know, I guess.
Okay, let's say the day will have a 2 in front of it.
Okay.
Monday the 20th.
I will wear that. So we're looking for some consolidation this week and a move down on dollar yen next week, right?
Yeah, vaguely. I think that I'd be on high alert for that type of movement happening. So I expect probably over the next few days, the way it's trading at the moment, it's had a few, it's on its way to the bottom of the trading range. Short of a ring low formation here forming on this is a daily bar chart, isn't it? Short of ring low formation forming, we're probably going to drift down to the bottom of the trading range.
Yeah. Like it. Okay. What else are you having a look at, Jules?
Yeah, so I've got a couple of other comments about things that are going on. So I think people, I'm just going to comment on the news a little bit, if I may. Somebody made a very interesting point to me the other day, which I thought was incredibly important for me to share with you guys. And it actually was relating to COVID, but it sort of goes to the heart of what's going on at the moment for those of you that know your economic history. So the challenge with COVID at the moment, especially in America, I think probably the reason why they're having so many people catching it now is because nobody quite knows who to believe. The president has been at best obfuscating about what's been going on around COVID because he's trying to read the opinion polls rather than actually do what's presidential. But then that's his call. He's allowed to do whatever he wants and pretty much does anyway. So the great challenge is people aren't listening to any of the experts, and I think there's a bit of a point to all of this, right? And the reason why I'll explain in a second how it works in foreign exchange and how it's going to feed through to foreign exchange is that I think the ability of the society in large to listen to experts has been incredibly diluted by the advent of social media over the last few years, and so consequently, you can sort of construct an argument whereby Fauci was talking quite comprehensively about what was going on with COVID, and nobody was listening to him for quite some time, and then they claimed it was political and whatever. So I would encourage people, if you really want to find out about COVID, my wife takes a very strong interest in it, to actually do some homework about what's important about COVID, and then try and figure out that first the cases come, then the deaths come. It does sort of like follow itself quite accurately, and just about every country has the same pattern. And it doesn't take a genius to work out the US is probably about to start swinging to a significant number of deaths now, having expanded their caseload so much. And there maybe will be many excuses as to why it's not happening. But the point is that this passion that everybody has to either politicize news or to try and fit it into 144 characters or 200 characters is quite remarkable. And we're actually lacking people who are grown up when it comes to news. And I think this is actually a classic sign for those of you that are interested in the cycle change from chaos to order and back to chaos again. So my view is that we're hitting the point in the economic cycle where we're starting the chaos period. And what does that mean? Well, that means that extraordinary things are going to happen. People have got fed up with the grown-ups in the room. You know, when was the last time you saw a central banker appear on breakfast telly? You know, they never used to do that. It's always been a bit odd for me. When you came out of the 70s and into the early 80s, people were crying out for central bankers who wore white shirts and very somber suits, people who would take control and make sure that the economy was back on the right track again. And they've been doing that now for the last 40 years. And I think the public have got fed up with that. And now we're going into a new area where we're going to a more chaotic place. And what that chaotic place is, it means that strange things are going to happen. And essentially that's good for volatility. So volatility is going to start to pick up. So of all the currency of all the classes of assets that I'm interested in trading right now, currencies come up in the top 2 of my list, obviously after gold, Ainsley, but come up in the top 2 of my list. And I think the volatility in the world is going to start to pick up enormously, which isn't the way that you immediately think about foreign exchange, because you say, well, everybody's got the same interest rate, so how can that be more volatile? Well, they're going to be more volatile because of the way in which people handle the chaos that's coming. And so as a consequence of that, I think this comes back to credibility. And the reason why I quite like gold and I quite like trading currencies is because gold essentially, for all intents and purposes, when it rallies because people lose confidence in the central bank. And that confidence has been eroded quite quickly, I think, in the US central bank over the last 2 years, which is probably a very good explanation of why gold is trading at $700 or $800 above what it costs to make it. So that's the reason why the commitment of traders is showing a permanent colossal short position. It's because if you're making gold right now at $1,000 or $1,100, you can't believe how much money you're making. So therefore, the gold mining stocks have been on a tear recently over the course of the last 3 or 4 months. And that's not that surprising, right? But it's not that surprising because people are buying gold because they're starting to not believe the central banks anymore. And I think that's the key driver behind that gold. And that also is going to be the key driver behind the foreign exchange volatility that we're about to start experiencing as well too. So, if you want to try and pin it down, anything that's got a peg is going to go. So the Argentinian peg has gone, or it's gone already, to be quite frank with you. The Hong Kong peg will go. I would also suspect that the Saudi oil, the Saudi Riyal linked to the US dollar will be destroyed as well too. So I think this is the signal of the time. We've had very low foreign exchange volatility for the last 10 years. I think that's about to change and change big time. I can't give you a date. Obviously, Trump losing the election will probably be a reason to sell volatility necessarily rather than buying it, because I think by the time we get to October, it's pretty obvious he will be losing. And I think he's going to be a one-term president. I don't think there's any particular hassle about that. I think that's pretty obvious from the way the polls are running at the moment, and the market's already pricing in what a Biden government would do. If the real issue is whether they get the trifecta and get the Congress and Senate at the same time, which would be extraordinary. And I think that would be a sea change for the American society as well. So for those of you, I think there was a comment earlier about America's too broken to be fixed. It's probably the only country in the world that I would never say that about. To be honest with you, I'll push back on that statement, because America has an amazing habit of reinventing itself faster than any other country on the entire planet. And it does it very, very well. And they will reinvent themselves as they continue to do constantly. So that doesn't...
Sorry, just to interrupt, that comment was in relation to the way that they're handling coronavirus. That was all. Not necessarily the economy or the way it's broken or anything like that, but they were just saying that comment was in context related to
Well,
how they've handled and handling coronavirus.
And
that's
thank you
it.
for clarifying that, Ainsley. And look, I think I always go with the old Winston Churchill quote about the Americans, which says they'll try everything until they actually realize that they've got to do the right thing. And the Americans will, the Americans are, I think, hitting that exact camp. And again, as far as COVID concerned, I think they're now beginning to realize they need some grown-ups in the room there. And I think that'll start to happen much more aggressively as we witness Trump possibly donning a mask. Now he realizes he's so far behind in the polls, it's almost impossible for him to win again. So yeah, look, so my thesis at the moment is that I think there's going to be, there are an infinite number of US dollars out there in the market. I've completely reversed my view about the US dollar in the course of the last 2 months. I was very bullish on the US dollar up to 2 months ago. Post-COVID, I've completely reversed that opinion. I think the central bank has been handing out money to just about anybody who wants it. And in fact, if any country comes asking the Fed for even foreign exchange reserves, they just give them a swap line of $200 billion and say, go on, get on with it then. I don't think there's a US dollar shortage out there. In fact, I would say the opposite. In fact, I would have said there's a infinite number of dollars, and the Trump administration wants the dollar lower by the election. Otherwise, they're never going to get a solid economic recovery, and they're very happy to export their problems to everywhere else in the world. So this is the reason why I'm bullish on the euro. For me, the euro chart trades like it's about to explode higher, and also the yen chart trades like it's about to go lower. And I'm really conscious that that means that in all likelihood, gold will continue its journey in fits and starts because it is overowned. Everybody's got it. The story is well known. It's all out there, but it still trades higher. What I think we have done is possibly, to Ainsley's point, move the stop loss a little higher on where you'd be questioning that strategy, right? And the questioning for me is probably somewhere in the 1775 camp this week, rather than 1755 as it was the week before. So we've really just sort of rolled up a little bit, call it a trailing stop, if you like, a trailing stop of hope, I think might be a better description for it. So yeah, and as far as oil's concerned as well too, I just can't get bearish on it at the moment. If you look at the way the curve has moved, so what I mean by that is where oil, when you look at a price for oil 2 years out versus the spot price, that is actually, that difference has collapsed in recent weeks and recent days, completely collapsed. The curve is now getting quite flat, and that's a sign, gosh, we may even start to head towards backwardation, which means that near-term prices are higher than the prices further out soon. But it's very hard to be bearish of oil at the moment, despite my misgivings about the way the price action is doing and how the markets come off the lows. It still just trades crazy good, and it traded crazy good on Friday. I was fortunate enough to cover my short at the lows on Friday morning, but the way gold trades right now, I mean, oil trades right now, it's going to continue to carry on filling those gaps. I see you got it there in Brent, it's filled that gap, but in WTI, there's about another $6 to go. So I think we might see oil a little bit higher still, which would dumbfound everybody, but I think is a possibility. Probably the only thing that is going to hold it back is that's a 200-day moving average on the chart, Paul, and maybe that it's been working its way towards that. It's probably got to break that and close a few days above it before I start to get too excited, but that might just hold it down for a little bit. So Paul, that's my wrap up about where I see things right now and what's interesting to me. And it's the middle of the month, so I'm not really interested in stocks at the moment. Come and talk to me again on the 20-something and we'll have a chat about stocks. Up until that point in time, I'm not particularly bullish through July. In fact, this is the bearish time of the year with this summertime. So don't really see a lot to do in equities till the end of the month.
Julian, can you hear me?
I can, Paul, loud and clear.
A couple of questions, if you don't mind, mate. Do you think the yuan might decouple?
Yes.
Wow, that'd be a big change. Boy, that would shock the world around, wouldn't it?
Well, what do you mean by decouple? Go up or go down?
Well, at the moment, the Chinese government set the value of it, right?
Yep.
Do you think it might become a floated currency at some point?
No, not unless it suits them.
Okay. I don't have too much else on this. So long-term oil, they're suggesting that, so oil's the demand pricing. Long-term oil at 2 years around $40. I guess we did say at the bottom that we thought oil would come back around 45, didn't we? We thought oil would, when it came back would be around 45. Maybe they're setting a bit of a long-term price.
Yeah, and look, when we talk about, getting back to the renminbi again, I think it's going to strengthen dramatically.
Interesting, isn't it?
Have you guys seen the Chinese stock market the last 2 weeks?
Yeah, it's been rallying.
Like a complete blow-off rally. It's absolutely explosive, and given where it's come from, that looks to me like a breakout rally. That's not coming back there.
There was a directive. There was actually a directive from the Chinese government to anybody trading on the Chinese stock market to be considerate.
Yeah, I think that's got something to do with what's going on in Hong Kong.
Ah, I would say so.
100% Hong Kong. So if you look at some of the IPOs that's gone on recently, and the reason why, sorry, I don't necessarily get into this, and maybe some people can maybe help me out with this, but I know there's been a lot of problems in Hong Kong from a political perspective, but then why is the Hang Seng trading very well? Why are the shares of the Hong Kong Stock Exchange trading incredibly well? Why is property prices not falling that much in Hong Kong? Perhaps somebody can help me out if I'm wrong there, but there's a lot of things going on in Hong Kong now. That's the Chinese market, right?
That's the A50.
Yeah, that doesn't look like a bearish market to me. That looks like the beginning of the next move.
It doesn't look bearish at all.
Looks like all-time highs.
So they are the Chinese authorities, in my estimation, are having some issues with Hong Kong financially looking a better place than Shanghai is, and so this is maybe the start of a strategy around that. I think it's very dangerous to be short of Chinese stocks.
Interesting, that, isn't it?
And why is that happening when that isn't happening anywhere else apart from in the ridiculous NASDAQ, which is basically being bid up by option traders? So this is something special's going on here. This is totally under the radar. Nobody's mentioned it in the last month. What's going on? Look at that rally from like 3 weeks ago. That's awesome.
Crazy. That's crazy stuff, isn't it?
Yeah,
that looks like an aversion point trade and a classic one. I think that's got.
Were you across that, PH?
Was I? Sorry?
Because I know you like aversion trades. It's just, were you across that?
I can't trade everything, Kingsley.
Sorry, I was having a go. But yeah, how crazy. Look at that.
Julian, is that you for now?
Well, you had a couple of questions, Paul, so I'm happy to try.
I've done my questions. I'm good as gold. I think I'm okay. There are a couple of questions come in. There's quite a lot of stuff about comments more than questions come in. I don't think there's how high for euro do you think, Julian? Above 1.14? That is a question I'm just straight out reading.
I was thinking 154.
Wow.
Really?
Yeah.
Oh,
I don't mind euro long.
Yeah. Okay. Look.
Crack it, though.
I think the dollar index is going back to 60 cents.
Oh, jeepers creepers. It's the money to be made, isn't there? Boy, tell you what, mate, if you're halfway right, we can make some money, can't we?
Well, that's sort of my point here, is that I think there's something really structural changing. There's your higher. You want a higher low?
Right.
That's the euro, right?
This is a monthly chart for the euro.
So there's your higher low. Guys, why are we not bullish? That's like as bullish as bullish can be. Until it breaks that low point, you've got to be long.
Yeah, true.
Okay.
Because you look at a daily, and that's giving you like pinball kind of stuff. It's been backwards and forwards, and I've been watching the euro for about the last week and a half, and it just hasn't gone anywhere. But yeah, you're right. It's the higher lows now in place.
Hasn't gone anywhere on the daily chart, but then you wouldn't expect it to because volatility is so low.
So yeah, exactly.
Then when you look at it on a monthly chart, look at all those tails, right?
Long
yeah, they were telling you already it was a buy when it got below 109 3 or 4 times, right? So Helen, what you have to do sometimes with these things is to figure out, especially with these reserve currency pairs, right? So it's like cable, it's like the euro dollar, euro US dollar, you know, those sort of currency pairs are ones where you can look at a more long-term structural one, because that's what the fund managers are looking at. And I guarantee you right now, the fund managers are super, super underweight Europe.
No doubt of that.
They're massively underweight Europe, right? When those guys start to buy, it'll be like that up move we had back in 2017. And it won't touch the sides for 3 or 4 months. So
Yeah, just be on the right side of it, guys.
again, this might not happen. It could all be wrong. I could be completely wrong in my thesis. But the great news about being wrong in the thesis is we look at it and we go, well, actually, technically, that's sort of supporting the overall thesis right now. So when you drill down to a daily or weekly chart to try and get your timing entries, you know, don't be looking at a 4-hourly chart here for timing entries, right? This is now looking at a weekly chart possibly for timing entries. Because the monthly chart looks really bullish. Let's look at the weeklies and see if we can figure out a place to enter the trade from. So you'd be looking for some kind of retracement, which is actually sort of what it's doing, because it's actually gone nowhere for the last month, which is great. But look at what happened for the previous 3 weeks, right? So that's barely retraced 30% of the move down. I think it was 35 or 37% of the move down it retraced. So it almost is like a classic Fibonacci vague back in the zone type of retracement, which means it should, if it holds these levels, continue higher. And when I keep looking at that chart, I keep coming up with wave 1, wave 3. This is a complex wave 4, and we're missing the last wave up. And that last wave up could be an explosive one, just in this move alone, let alone what might happen later on. Anyway, there's just my idle thoughts about what's going on.
Cheers, Julian. Thank you very much. PH, have you had a pretty good run through your stuff?
Pretty much, Paul. Yes. Yeah.
Angie, how about you?
Yeah, I got to gloat about $1,800 on gold. Hooray!
Yeah, look, that has been good, hasn't it? Hopefully that will
It's
hold.
been a great run, Paul.
Look, I'd like to show you guys something I've been just having a look at. I haven't decided how to trade it yet, but I've just been playing with it recently, and I'm keen to share. Can I share this, guys? Is that okay?
Oh, please do, Paul.
Thanks, Helen.
Look, I was in the car driving to and from wherever Awakuni the other day, and I was listening to a guy on a podcast, and the guy on the podcast was saying he was asked why the US stock market wasn't paying any attention to coronavirus and why markets weren't doing what they were supposed to do. So I'm just trying to share my screen here. And he said, well, because the big guys don't care about coronavirus, and they're not watching it because the psychology of them's changed, and what they're into is volatility, because they've decided that for investors, drawdowns are more important than profits, and what they don't want is to have drawdowns. And if they have drawdowns, investors leave. So it's not about how much money they make, it's about how much money they don't lose. And that as part of that, what they're doing is they're not trading volatile markets. So as soon as volatility arrives in a market, they just exit it. Now, and this doesn't mean that if they're long and volatility goes up, they're exiting the uptrend, which is one of the reasons perhaps trends are a bit weird. And I thought, well, that's interesting. I was talking about US share markets, how do we get volatility? Because I can't use the VIX because they're not talking about volatility across the entire market. These guys clearly are billion-dollar funds. They clearly have a way of looking at volatility on individual charts. So I had a bit of a play around with just ATR to see what I could find out. And what I found out was that every time the S&P crashes down, as soon as volatility drops, the S&P buys up again. So if you're watching the S&P crash, volatility lifts, and as soon as you see the volatility start and drop again, the S&P rallies. I thought it was interesting. So volatility starts to drop there, buying comes back in. Volatility starts to drop there, buying comes back in. Same here. Every time you see volatility start to drop on the 5-day ATR, it looks like these volatility traders are coming back in and buying it. Now, I'm not saying they are. I'm not saying they are, but I'm saying it's interesting to me, and watching it's been quite fascinating. But the other thing I found, which was really interesting, is that, right now, if you have a look at the daily chart, there's not much volatility on this S&P. This is pretty flat, right? And what I did notice was that this move up, as volatility drops, these guys tend to buy. Interesting. But what I also noticed was when volatility on the S&P got down around 20, here, that you could sell it. And that when volatility on the 5-day, well, not volatility, when the ATR 5 gets under 20 on the S&P, it looks like they stop buying. And look again, this isn't real. This isn't real. This is just something I'm mucking around with and watching it. And that's fascinating. It's interesting. I don't know if this is at all true, but it looks to me as if they buy, and when volatility gets really low, they stop buying and the market corrects and goes the other way. So when volatility is really low, when ATR is really low, the S&P sells. And when it's coming down, you can use vol or ATR as a signal that it's finished. Now, it's not perfect here, but if you go back on the big moves down, it ain't bad. Every big move down on the S&P, as soon as the vol starts to drop, the S&P starts to recover. And I'm not quite sure what I'm going to do with it. For those that don't follow the stuff, I'm currently long the S&P. I'm trading the third Monday of the month trade in two different ways. I'm trading it in the conventional way, and I'm buying and holding on the third Monday of the month. So I'm trading it in two ways. But I'm finding the ATR, the 5 ATR, that I haven't spent too much time on this yet. I reckon you could probably come up with a better number. Given I can't use the VIX, and I probably can have something programmed to give me volatility more clearly on this, but it suggests to me that the theory that there's big funds who are no longer trading fundamentals at all, but who are trading volatility. I look at this and I think, well, possibly that's true. And I'll be watching it for the next few months and trying to work out some accurate, this is just a bit of a theory, have a bit of a play with it thing. I'll be testing some stuff on it on the next 2 to 3 months to see whether it's something that I can use to make some decisions around S&P. I'm with Julian. I reckon the death toll follows COVID numbers by about 21 days. And when the numbers go up in the US, they've got some pretty interesting choices. And as much as I'm long S&P, if ATR gets around 20 on the S&P again, I'll be out of my longs just in case.
Paul, can I just add to this? I really like the way that you're thinking about this because it is actually true. So what has become the active managers, those are the ones which aren't just passively buying the index and just sitting there holding it, but the active managers, the ones that move risk allocations around, have been deploying a risk parity model for some time now. It's been sort of something in the last 10 years that's become a bit of it was, if you like, a relatively new thing about 15 years ago and has now become mainstream. And so it actually creates markets that behave very much in the same way as the market did in 1987. So as the 87 crash unfolded, you found that people were selling because of portfolio insurance. Well, that's exactly what's happening here, because they're selling because volatility goes up. So they have to allocate away from that asset class and into a class which is less volatile. So usually with stocks as a broad asset class, they're moving out of stocks and moving into bonds, fixed income, which is a safer area.
Can I ask, and this is my impression from the podcast I was listening to, that for these guys, this isn't an optional trade. That this isn't you get the signal and you choose whether you take it or not. This is, if this is your vol leading, you move your portfolio.
100%. That's exactly what they're doing. It's so the strategy is called risk parity.
Yep. Look, guys, I can't get the Q&A up, and I think there's some questions. Oh, it's in at the back there. Sorry, guys. Zoom does strange things to me at times. I can't actually get to it without taking my chart away, which is a bit frustrating. Can someone tell me if there's any questions I need to answer on this? So the strategy is called risk parity. It just seems to me that it's, well, again, Julian, I had to look across currency markets to see if, I had to look at your dollar yen chart actually to see if I can see something on dollar yen. I can't see it as clearly on currency things. But again, I don't have a volatility measuring tool that like they have. I'm just using, doing some testing with ATR to make it line up and going, well, that's interesting. I need to do some work on finding a better volatility measuring tool.
I think it's much clearer, Paul, in asset blocks. So in like equities versus bonds and equities versus, say, major commodities like gold and something like that. That's traditionally where you've looked into the way where that risk parity tool has been most effective. It's at the moment, I doubt with the way that interest rate differentials are so flat across the world that they'd be drawing a lot of conclusions from the foreign exchange markets at the moment. That doesn't mean to say that things won't change, but I would suspect that they don't necessarily allocate away from different currency blocks. What they will do is they'll do like a risk on, risk off type of thing. So when volatility is relatively low, they might allocate more to emerging markets. And when volatility is high, they'll allocate more back to, call it, traditional markets like the US and the UK. It's like a risk off type of approach, which will cause significant movement in things like the Brazilian and the Mexican. And if you look at those currencies over the course of this year, the Brazilian market has been absolutely crazy this year. That FX rate has been nuts. And also the Mexican as well too, right? So there's been some real price movements in those crosses, rather than necessarily staying with the traditional ones.
Cheers, mate. Thanks for that. Look, I'll keep a bit of an eye on this, and right now, my theory is that if the S&P sells quickly, that on volatility drop or on ATR drop, I'll be buying it. And right now, if ATR gets around 20, I'll be selling it, and only in small amounts while I have a look and try and build a better measuring tool. But I'm fascinated by it. And look, some of these things you hear, you can listen to a lot of podcasts with a lot of, you can waste a lot of time listening to some of that stuff. But boy, when you hear some good stuff, there's some really good stuff. And I keep finding this where every time it spikes down, volume ATR drops, and you get a chance to buy it. I really, you buy it there, you're doing okay. You buy it there, you're doing okay. You buy it in here, you're doing okay. You buy it in here, you're doing okay. It's and one thing about ATR, it can't be curve fitted. It's not different afterwards or anything. ATR is ATR. It's not making massive changes afterwards. Anyway, that was me. Anything else from you, Julian?
No, Paul, it was an interesting podcast, though.
It was an interesting podcast, wasn't it? And I've got to say, it certainly got my mind moving while the family were up at the ski place. And I haven't listened to this week's one, so I'll have a listen to that later on, see if it brings me anything else that's interesting. Actually, mate, you mentioned a different podcast yesterday when you were in and gave a name of a guy. Could you send me his name?
I'll stick it on the chat for everybody, actually. So the guy's name is Hugh Hendry.
Oh, that's right. Yeah, and he was in a different location, right, for the podcast.
Yeah. He has a YouTube channel. He's just started up. So he's an ex macro trader, macro fund manager who has set up a YouTube subscription, and he's completely wild and wacky. Don't get too put off by his appearance. He's like he's been on a desert. He's like he's been on a Mediterranean island. Well, in fact, he's been on St. Bart's for the last 3 years, semi-retired, and he's come out of retirement because he's noticed that the world is actually entering a new place. I think the ideas I was talking about earlier, some of those has come from his inspiration. He's written a significant article called "The Dawn of Chaos." Which when you read it is fascinating, but it is actually 30 pages long. So probably if you don't have time for that, just look at his YouTube channel, his subscription under Hugh Hendry. I think the top one that appears is the interview he gave on Bloomberg recently, which was quite informative. But you have to take him with a little bit of a pinch of salt. His ideas are a lot of them are institutional ideas. So his ideas about the yield curve and things like that are things that most of us can't put on as private traders, but his concept about foreign exchange chaos and the switch from a political stability to a political disorder is very appropriate and really resonated with me and had me scratching my economic history head going, "Oh my God, he's absolutely right. I can't believe I haven't seen this coming earlier."
Interesting. I think we've seen in the last few the American presidents are opposites of each other all the time, and it'll be interesting to see what follows Trump. And presumably it's going to be at this election, but be interesting to see if we get a bit of an overreaction back to order after him, because boy, interestingly he wore a mask today, so there's progress. To be honest, mate, I'm gonna, if he does get voted out, I'm gonna miss Donald Trump, just from the point of view that he's interesting, not.
Yeah. I think to some extent we all will, Paul, but he's just so it's almost like I'll be really careful when I say Joe Biden will be very interesting, because he will try and do nothing at all. But it's the first time the Democrats will have possibly had a trifecta where they've got the Congress, the Senate, and the presidency for a gazillion years. Yeah. And they will try and push through a heap of legislation that will, in all likelihood, to the point that Ainsley made earlier, all likelihood start to set America off on a different pathway to where it's been recently. I'm not talking about, the noise of Trump. If you actually look at what Trump has done, right? The economic policies, cutting taxes, deregulating. He's had a tremendous success up to the COVID. He was being tremendously successful with those policies, right? Because the guys underneath him were doing a lot of really good things, and he delivered on what he talked about. He pulled troops out of countries, and he was standing up to the Chinese and to the Russians and doing the sort of things. All the things he said he was trying to do before he got elected, he was doing. And it's got lost in the conversation around COVID, sadly. If you'd quite like him, then sadly, I'm not sure anybody does like him, but anyway.
Yeah, I'm not sure I like him. I'll certainly miss him. Again, he's a man that can create a headline, create a move. Ladies and gentlemen, are we winding up?
I think so, Paul.
90 minutes. Are we getting close to it? I'm going to go and do the team chit chat, see if anyone's going to join me for a chat in the bourbon tonight. I think we are.
Been Julian, a long one, Paul.
Yeah, it's been a long 3 days. There's no question about it. But interesting.
Oh gosh, and then we get to hit the markets first thing tomorrow morning. But yeah, keep those things in mind. And yeah, look, I as much as I will miss Trump in inverted commas, I'm looking forward to a bit of a beige cardigan hitting the White House, to be quite honest.
Look, yeah, we will watch and one thing about that man. I'd suggest to you this, Ainsley, and I could be wrong, but I reckon he was further behind at this time last time.
Well,
and he is capable of pulling out a miracle, and God knows who's in the background.
Sorry, actually, hang on, intervention. No, he wasn't.
You sure?
He was absolutely way further in front at this stage last year by about 15 points. He was further in front this time around.
I was reading some different stuff.
Read the Economist article on it they brought out last week. They are predicting a Biden victory by some margin. They say he's lost a whole heap of the swing states already. It's almost,
really?
Unless he pulls a house of cards trick out of this, he has very little chance of succeeding, because he's way further behind than where he was this time last time.
Cheers, guys. We will pick it up.
And the last point on that, Paul, he was further in front, and everybody hated the opposition. They all hated Clinton, right? So this time around, nobody hates Joe Biden, and Joe Biden's further in front than Trump was. So it's Biden's to lose, in my humble opinion, at the moment.
Oh, I definitely agree with that.
It was Obama, not Clinton.
He went against Hillary Clinton last time.
So the last election was against Hillary Clinton, right? So.
Oh, Hillary Clinton, wrong Clinton. Sorry, I was thinking, God, no, wrong one. Okay, I'm tired. It's time to go. It's time to go.
Before you do go, guys, PH, thank you very much for stepping in and hosting the show today. Really appreciate you coming in and doing that while we were doing an event tonight. Much appreciated. Julian, as always, appreciate you popping most weeks, but particularly the once a month where you're here to lead the show. I really appreciate your time. Ainsley, thanks for coming and doing Golden Oil for us. And to the rest of you guys, thanks for coming and listening to us. We'll be back next week.
Guys.
Ready to share some more. Thanks, everyone. Have a good trading week. And hey, guys, take your time and make good decisions this week. If you do that, there's some money to be made. Cheers, guys. See you later.
Thanks.
Bye, everyone.
Bye.